Well, we are now in the historically volatile month of October. So stocks already starting off choppy, and it looks like we may have yet another classic October for global stock markets, and there could be increased volatility in the weeks ahead. So we did see markets up broadly last week across Europe, Asia, and the US. We also saw metals rising as well last week. So pretty broad increases in asset prices, and it looked like the week was starting off on Monday with a continued increase in global stocks, and even actually on Tuesday morning as well, until that came to a screeching halt here midday Tuesday. And that was, of course, a result of this presidential tweet where Donald Trump is calling out the fact that he's going to be walking away from negotiations on fiscal stimulus for the time being. And, you can blame one side or the other here, but the reality of the situation is markets do not like uncertainty, and markets continue to think that fiscal stimulus is needed to keep this recovery on track. The Fed chair, of course, has said similar things, and the market has been wanting to see this resolved, but it doesn't look like in the next couple of weeks it's going to get resolved. So we may not have clarity on stimulus until the elections, or even well after the elections now, and that has spooked some investors. And I personally think that this is a pretty significant issue, and I do think there's significant risk ahead over the next couple of weeks. Let's talk about why that is. Well, we know that calendar Q3 ended for a lot of companies last week at the end of September, and many companies are actually now in the blackout period, meaning they can't do buybacks, they can't do meetings with investors, and that is because we have Q3 earnings reporting season coming up in about 2 to 3 weeks. Earnings reporting season is the time of year, or one of the 4 times a year, when companies report their quarterly earnings. And we will get Q3 reports out starting in about probably mid to third week of October. So until then, companies are in blackout period. We're not going to be getting a whole lot of company-specific news. And we're also at a time when we're not getting a whole lot of macro data this week. If you look at the macro calendar, not a whole lot of macroeconomic data releases to help the market at all. So it's a lot of politics playing a big role. Of course, last week we had politics playing a role as well. We had that awful debate, and it was pretty much widely accepted that that was one of the worst debates we've ever had in U.S. presidential debate history. A lot of screaming, not a lot of coherent arguments back and forth, frankly. But it actually did help Biden get a slight bump in the polls, and it looks like he is still heavily favored by about 14 or 15 points to win the presidency. Now, it's worth noting that, under Democrats and Republicans, the stock market can do well under both. And we actually did see Goldman Sachs come out as well and say, don't be scared of a Democratic sweep. And I would agree with that. We did see under the Obama administration, when Biden was VP, that the economy did improve from the 2008 lows, and we did see a decrease in unemployment rates pretty much throughout the Obama time, and we also saw an increase in stock markets broadly. So I'm not too worried about the eventual outcome necessarily, but I would be worried if we have some kind of contested election, and it throws more uncertainty up for markets. Markets do not like uncertainty. It's also worth noting, too, that there are sectors like cannabis or alternative energy that could actually benefit a lot from a Democratic sweep in the election. So keep in mind, there are going to be opportunities no matter who wins the presidential election and the congressional election. So there's always opportunity in markets. Just keep that in mind. I don't think we need to be necessarily afraid of it. But again, politics playing a big role, and that can swing markets in really violent ways over the next couple of weeks as we get closer to elections, especially, like I said, with a lack of announcements coming from companies, at least until the 3rd or 4th week of October. Now, what do I expect for Q3? I'll probably address that a little bit closer to the actual earnings reporting season itself, but I think it's going to be, company specific. I think we could actually see a reversal in some of the hot growth rates we saw on the work from home stocks, and we could actually see a little bump in some of the sectors that have been recovering, like travel and retail and maybe even airlines. However, offsetting that, we do have this uncertainty over stimulus, and we have seen that the jobs data suggests there has been a slowing of the rate of improvement. in the unemployment rate. So last week, of course, one of the big macro pieces of data that we did get was the jobs report for September in the U.S., and the U.S. continues to add jobs with about 660,000 added in September, according to the report. That was a little bit below expectations, which were about 850,000. And, the unemployment rate is here up at around 8%, and that's about double where we were prior to COVID. So again, this is not an issue that's going to go away super, super quickly, especially with a lack of stimulus. And so the slowing of the improvement is really going to, I think, weigh on some specific stocks and probably the market as a whole, unless we do get more clarity in the overall stimulus. So, while I think that retail and airlines and refiners and those areas that have been hard hit and still haven't fully recovered yet, I think they could potentially benefit from Q3 earnings. Really, as a headwind to that, we do have this uncertainty over fiscal stimulus. So really hard to know where it all shakes out. But again, Q3 will be really interesting to see some of the comments coming out of companies about what they're seeing as the recovery continues. So what other things do I want to highlight from specific companies? Last week, we didn't really have that many earnings. We had Micron, and they had pretty decent earnings, but their guidance was a little bit light for the future quarter. Now, that is a little bit company specific because Huawei is a customer they're no longer going to be able to sell to, but we did see a gap down in Micron a little bit on the earnings release if we go back to last week, and that weighed a little bit on that stock, but overall, I thought the report was pretty decent overall. One that was interesting, worth noting, was Bed Bath & Beyond. This is a retailer, and this is a highly shorted stock that has not been doing well over the past few years, as you can see, but as of the past few months, having a really nice recovery. They actually had comparable store sales growth year over year positive for the first time in, I think, about 2 to 3 years. So this is a stock that has gone up more than 5x from the bottom this year. And interesting to see, similar to GameStop, a business that many think is probably challenged long term and may not make it, in the near term at least, having a very nice recovery. So could that be foretelling what might happen with some of the other beaten up retail names? Not quite sure, but it's definitely interesting to note that they are seeing a recovery and they're in business. So that was good to see. And other than that, I didn't really take note of too many other things. Like I said, there weren't that many companies reporting last week, and there are even fewer companies reporting earnings this week. As you can see, just a few like Levi's and Domino's Pizza and Paychex, but really not a whole lot. And that's going to be the case until we get to like the third week of October, when we'll have hundreds of companies start reporting their earnings. So light week for earnings, light week on the macro data front as well. If we look at the economic calendar, not very many macroeconomic data releases here, just some trade balance numbers from the UK and the US, and then some talks in the Euro area about non-monetary policies. Now, let's talk about specific stocks that I'm watching this week. So I think it's always worth noting on big down days in the market what stocks are bucking the trend and actually are up on the day. So I noticed Gopro was a stock. They did come out with their earnings and some numbers around their subscribers to their subscription service. So GoPro, most of us think of it as the company that sells cameras, but they are also now selling software and subscriptions, and that could help the business long term. It's a area of the business that I think is worth watching. 5-year chart, GoPro has not done well, but I did notice over the last few days, so this is a 5-day chart here, you can see the stock was really showing some strength and did end up on the day a little bit. So just keep an eye on that one. That could be an interesting one to keep an eye on for traders. Also noticed some relative strength in a few travel stocks like TripAdvisor, which was having a really strong day today until the broad market sold off. So that's one that is worth keeping an eye on. I've been trying to keep tabs on the travel recovery numbers. Those numbers also look like they flattened out a little bit in September. So, the travel sector could be having a tough time. We know that there could be a lot of airline layoffs coming in the next week or two, since the stimulus package will not likely be passed. And that could weigh on the overall market as well. So I'm not sticking my neck out and saying you should buy travel names here, but it was worth noting that for whatever reason, TripAdvisor was showing a little bit of strength today. We also saw, on the flip side, the SPAC space actually had a pretty rough day, and one of the ones I took note of was IPOC, which is one of his SPACs, social capital SPACs. They announced a deal to acquire Clover Health, but the market did not like that. And so this Clover Health is basically a next generation insurance company, Medicare insurance company, and the market wasn't super excited about that. I think they wanted IPOC, the SPAC, to acquire something a little more exciting, maybe in the tech space or some other industry. But healthcare did not get investors excited. This thing was down about 13% today, and that actually caused a sell-off among other SPACs as well. Even IPOB, which is Chamath's other SPAC, and even some of the other unrelated SPACs that haven't announced deals were down today. So that sector cooled off. And I mentioned last week, I've been watching Switchback Energy, which is a SPAC that just announced the potential acquisition of ChargePoint, which is the largest EV charging network in the US. And this is one that's had a nice correction. So this is one I may be looking to pull the trigger on at some point if it gets cheap enough. And I definitely think it has the potential to be a high flyer longer term once investors get excited about it again, because EV is, as we know, is a very large growth market over the next decade, and the charging infrastructure should go along with that. So that's one I definitely think worth keeping on the watch list, especially here as it fills this gap and has this correction. We know if we look at some of the other alternative energy stocks, they have been absolutely crushing it this year. This is Sunrun. This is one of the largest solar installers in North America, and this is a stock that I actually called out on one of my videos at the beginning of 2020 as a stock to watch for this year, and this one is up significantly since then. I think it's up about 4 to 5x since the beginning of the year. So these stocks have been very, very strong, expected to potentially benefit from greater green energy spending if the Democrats come into power. And so SBE, like I said, definitely one to keep on the radar, and definitely a play in this theme if you're looking for stocks that could benefit. So that is worth noting. Other IPOs that are non-SPACs, we did have a couple of direct listings with Asana and Palantir successfully listing last week. Those were pretty quiet in terms of their trading performance, but they did have successful direct listings, so it's worth mentioning those. Sumo Logic is one that went public over the last couple of weeks. Had some recent inquiries about this from the investment community, and definitely one that seems to be trading at a little bit more of a reasonable valuation relative to some of the other SaaS and software stocks. This company competes with companies like Splunk and Datadog in the infrastructure and cloud monitoring software area, and so this is an interesting space that's been growing for those companies. And Sumo Logic is a pretty small company still, but potentially could have a lot of growth ahead of it. Trading at what I would consider as a relatively reasonable multiple valuation-wise for a software company relative to others. Not that it's necessarily cheap per se, but definitely one that relatively is not quite as expensive as some of the others. Maybe not as best in class as Datadog, but definitely one I'm trying to get more up to speed on and try to understand what the long-term potential growth rate could look like for this company. So that one may be one to keep on the radar as a recent IPO, especially if it becomes more of a busted IPO, as some of these often do. Other than that, I'm still watching the retail sector. Like I mentioned last week, there's some really interesting value plays there in the retail REITs, as well as some of the companies like Nordstrom that have not recovered yet. Nordstrom was getting a little bit of love for a couple days until the sell-off today. So we did see that make a little bit of a comeback. But, really for the most part, Nordstrom, if you look at a 5-year chart, still trading basically at its multi-year lows. So if you think that one recovers, then obviously that one could be a very strong performer over the next few years. But I'll have more to say on this in upcoming videos, so stay tuned for that. And other stocks that I'm watching, I've got some special situations on the radar, but we'll talk more about that as we approach earnings season too. There's nothing I'm really looking to take action on right at this moment, especially with the market teetering the way it is. I do think there could be some further downside to the market in the next week or two, as we don't have a whole lot to prop it up with really just bad news on the political front, making things a little bit, more uncertain for investors out there. So that's kind of how I'm thinking about things as of today. Again, things could change in 2 or 3 days if the tune changes on the whole stimulus package, or if something changes on the virus front. Maybe the Republicans have those vaccine announcements ready for the market whenever the market, sells off for 2 or 3%. Maybe they're waiting to spring those on everyone just before the elections. Who knows? We could get some October surprises, as they call it. But for now, I'm kind of sticking with what I've got, and I'll be assessing hopefully some good opportunities if we do get a sell-off. So hopefully that's helpful, and if you have anything that you want me to take a look at this week, hit me in the comments. If you have any other questions or comments, anything that you're watching this week that I may have missed, definitely let me know. Take care, everyone.